Assuming you have a net worth of $12 million today, what would you do with the money? If you are like most people, the money would be spent on luxury cars, fancy clothes, fine dining, and extravagant vacations. However, that was not the case with Benjamin Graham. Benjamin Graham was born in London in 1894 and moved with his family to New York City when he was just 1 year old. His father died when he was 9, leaving his mother to support the family. Graham attended Columbia University, where he graduated with a degree in economics in 1914. After college, Graham started working on Wall Street as a messenger boy and eventually became a stockbroker. However, his career was interrupted by World War I, during which he served in the Army Air Corps. After the war, Graham returned to Wall Street and began to develop his investment philosophy. He was influenced by economist John Maynard Keynes's writings and his own experiences as an investor during the Great Depression. He became a strong proponent of value investing, which involved analyzing a company's financial statement and buying stocks, trading below their intrinsic value. Graham remained humble and grounded despite his success as an investor and teacher. He lived a simple and frugal lifestyle and was known for his dedication to his work and his students. He often said that teaching was his true calling and that he enjoyed it more than investing. During the Depression in the 1930s, Graham focused more on analyzing a company's fundamental value than its stock price. He believed that, by looking at a company's financial statements, earnings, and other vital indicators, investors could identify undervalued companies likely to perform well in the long term. This approach, which became known as value investing, was in stark contrast to the prevailing view on Wall Street, which emphasized short-term speculation and market timing. One of Graham's most famous examples of value investing during the Depression was his investment in Northern Pipeline, trading well below its book value. Despite the company's financial troubles, Graham saw long-term growth and value potential and invested heavily in the stock. Over the next several years, Northern Pipeline rebounded, generating significant returns for Graham and his investors. After his success as an investor, Benjamin Graham began a second career as a professor of finance and investing at Columbia University. He taught at the university for over 20 years, and his classes became renowned for their practical insights and real-world applications. During his teaching, Graham emphasized the importance of diversification and the dangers of speculation, teaching his students to focus on a company's long-term fundamentals and avoid short-term market fluctuations. He also stressed the importance of discipline and consistency, urging his students to develop and stick to a clear investment strategy. Benjamin Graham's purchase of GEICO was a highly successful investment that has become legendary in the stock market's history. During the early 1950s, GEICO struggled with rising claims and competition from larger insurance companies. Graham saw an opportunity to invest in the company and began buying shares for his investment partnership, Graham-Newman Corporation. He was drawn to GEICO's low-cost, direct-to-consumer insurance sales strategy and its competent management team, led by CEO Lorimer Davidson. Graham's investment team accumulated a significant stake in GEICO and eventually became the company's largest shareholder. He joined the board of directors in 1951 and played a pivotal role in improving the company's fortunes. GEICO began to focus on its strengths, cutting expenses, and improving its underwriting practices. By the mid-1950s, GEICO was one of the fastest-growing insurance companies in the United States. Graham's original investment, of around $700,000, had grown to over $400 million when it was acquired by Warren Buffett's Berkshire Hathaway in 1972, representing a return of more than 57,000%. Another investment success of Graham happened in the late 1940s, when he invested significantly in American Telephone and Telegraph, AT&T, facing significant challenges due to rising competition and regulatory pressure. Graham recognized the company's potential and invested through his investment partnership, Graham-Newman Corporation. In 1947, Graham purchased 100,000 shares of AT&T at a price of $157 per share, representing a substantial investment for his firm. At the time, the stock was trading at a low price-to-earnings ratio of just 5, making it an attractive investment opportunity for value investors like Graham. Over time, Graham's investment in AT&T proved highly successful. As the company continued to dominate the telecommunications industry, its earnings grew, and its stock price appreciated. By the time Graham sold his shares, in 1955, he had realized a more than $1 million profit, representing a return of over 600%. Graham's investment in AT&T became one of his most profitable, demonstrating his ability to identify undervalued companies with long-term prospects. The Intelligent Investor, written by Benjamin Graham in 1949, provides a comprehensive guide to value investing, a strategy that involves identifying undervalued stocks with the potential for long-term growth. Some key principles and lessons from Graham's philosophy include: the margin of safety. Graham believed in buying securities priced below their intrinsic value. This meant looking for companies with strong financials, solid management, and long-term competitive advantage. By purchasing securities with a margin of safety, investors could protect themselves against downside risk. Mr. Market. Graham used the analogy of Mr. Market to illustrate the stock market's volatility. According to Graham, Mr. Market is like a manic-depressive person who offers to buy or sell stocks at different prices every day. Rather than being swayed by Mr. Market's mood swings, Graham advised investors to focus on the underlying value of the companies they were investing in. Diversification. Graham believed in the value of diversification to reduce risk. By spreading their investments across different industries and asset classes, investors could protect themselves against the risks of any single company or sector. Long-term thinking. Graham believed that successful investing required a long-term perspective. He advised investors to focus on the underlying value of a company and to hold on to their investments for the long haul, rather than being swayed by short-term market fluctuations. Benjamin Graham was known for his frugal lifestyle, evident in many aspects of his personal life. For example, he rarely traveled for pleasure and instead preferred to spend his time studying stocks and analyzing companies. He was also known to be very modest in his spending habits and did not indulge in luxury items, even when he had the means to do so. One story that illustrates Graham's frugality involves his decision to drive an old, beat-up car, even after he had become a millionaire through his investment success. According to his son, Daniel Graham, Benjamin would drive his car until it was no longer drivable, and then purchase another used car to replace it. Daniel recalls his father saying, "A car is just a machine to get you from one place to another. Why spend more than you have to?" Another example of Graham's frugality was his decision to live in the same small apartment in Manhattan for over 30 years. Despite his wealth, Graham felt no need to upgrade his living situation and remained content with his simple, modest lifestyle. He also refused to pay for a telephone in his apartment, instead, relying on a payphone down the street to make and receive calls. Another time, Graham's frugality involves his wife, who once asked him for $50 to buy a new dress. Graham replied that she could buy a dress for $10 and that he would invest the remaining $40. This story highlights Graham's dedication to investing and his belief in the power of compound interest. These stories, and others like them, demonstrate Graham's commitment to living a simple and modest lifestyle, even in the face of significant financial success. For Graham, pursuing wealth was not about indulging in luxury items or status symbols, but rather about achieving financial security, independence, and living a fulfilling life on his terms. So, referring back to the initial question, what would you do with the money if you had a net worth of $12 million today? Would you spend it the way Benjamin himself did? Personally, I imagine long vacations, with lots of time hanging out with friends and family. With that amount of money, traveling the world should no longer be a challenge. But regardless of whether you agree with his way of living, it's undeniable that Benjamin Graham was one of the most successful investors ever. His philosophy of value investing still holds lots of truth to this date. And Warren Buffett must have good reasons to call The Intelligent Investor, by far the best book about investing ever written.